So the whole idea of the trade is how a move changes your perception of what's going on and creates a skewed view of where you think a market's going, or increases your expectation of being able to get something out of the market. So this is the situation we got on Friday. This is in the Bund. On Friday, well, on back end of Wednesday and Thursday, we then broke out of this sideways range and dropped straight back in on Friday morning. Once back inside that range, there was good scope then to trade all the way through. It's well traded, we don't need to hang around there anymore. Through 65.34, the move can then keep on going. So in terms of a trade, what you were looking at is to try and get in somewhere as it comes back inside the range. So from the morning's trade, you were looking at if we could break the initial balance, you've got a ledge to break. That can then give you a continuation. First target, the old high volume down at 34, and then the bottom of the range. This is a trade that, because we've spent a long time not doing a great deal, has got scope to keep on going as well. So what you end up with, and I'll show you, well, firstly on this was the result. You got this strong trend down, we moved volume down all the way. This is very typical of a trend type looking day. One that you can expect to close very near the low, one that you can expect to have a pretty decent range, which is exactly what it had. By the end of the day, we were trading down here. So I'll go and show you what it looked like in terms of the actual move. Because this is building up to the FOMO trade. This isn't the trade. This is the trade that people are trying to play, that people are perhaps missing out on, because this is the first time it's broken like this. We've not seen any big range of this size for some time. So this comes unexpected for a fair few people, and that's partly where the FOMO comes from. So this is the move out of the initial balance that then takes you down towards those 34s. I'll start the little video off of this and talk you through what's going on. So what we're getting here, you're getting the break, but what you're also looking for is other clues to this break. You know, what else is going on that suggests to you that this could well be on? Well, to start with, you've got this sudden drop in delta on a little pickup in volume. And even when you get the bounce, so that's up towards the mid 60s, delta doesn't change at all. Then volume starts picking up more and delta starts falling, and we'll see this on the ladder in a moment. So here we are now down towards the 56s, so we're right down towards the lows of the range. You've also got 52s to break, which is a poor low from the previous day. So what you're looking for here is you're looking for the chance to sell. You're looking for any selling to take the bids out quite easily and find no buying back into the offer. So a minute, still sitting below 56, not loads going on at the moment. There you go, takes it offered 55. What you don't want to see is any buying back into 55s here. We see it's now traded 250 there, and that offer's building up as well. Little trade down, we're getting very little back up, and this again, there we go, smaller size getting traded back up. And every time it trades a decent amount, the size comes back on the offer. This is looking good. This is where it's starting to get quite heavy, or it's what I'd call quite heavy type price action. It might be able to go bid, but it doesn't then trade a great deal into the next offer and very quickly trades back through that bid. So there's selling pressure in this market. And this is very early on in the day. You know, to be getting onto this early is pretty good. You know, that's where you're going to get the most out of these types of moves, rather than waiting for the second wave. And there we go, trades 300 through 52s. No counter bid. Here you start seeing it much quicker, that it just trades into the price, takes it out, trades into the price, takes it out. 1,000 into 48, comes back and immediately offered. So this is where you're really starting to see things getting a bit heavy. You see the volume building up at 47, 48 and no willingness to buy back through this, just constantly absorbed. So that's the place then to have another go at selling. Pushes on further. Down towards the 45s. There's smaller levels in here, 45, 41. The main area you're looking for is 34 to 36 though. You see now every bid back up is countered very quickly. Selling comes straight back in. There we go. Even when it gets bid 44, you're getting very little trade into 45. And selling keeps coming. So there's a willingness now that even after breaking the low, people are still willing to sell new lows. It's down at these 44s. Now seeing again, reloads. Traded 4,000 lots at 44s now, or nearly 4,000. And this is how you get that very typical little high volume patches on a trend type move. Once it breaks away from here, you then expect this to be quite a quick move. So it's offering you a chance to get in, to sell it, before the move then continues. What we've seen all the way down this move, very little willingness from any buyers to come in and push this up. Now this is a phase where you're waiting, and on a trend type move, this is very typical, that we get the pullback and you wait as people sell. And the reason for this is sellers at the moment are able to get filled. There is buying into them, so they're able to get filled. At some point, once prices start falling further, once we get back through that 6,000 that's now traded at 44, sellers then can't get filled on offers, so they've now got to come to market and sell it. Here we go again, decent bid at 42 and everything's getting absorbed at 43. So the selling's still there in this. So yeah, now we start on the next leg. This is where you can expect it to speed up once more. And there we go, quickly down to 37, 35, 34, 3. Gives you that chance to cover. And even after that, as soon as we get down here, there's no bounce to find new sellers. Immediately the selling comes straight in at 32s. We start building up the volume once more, just like we had at 44s. This is where that delta's dropping again as we get down towards the 32. So delta's still dropping in these candles here. We then get one final little push down. Delta goes flat as you get this pullback, but on the pullback, 32s just get sold and sold and sold and sold again. This is just what you'd want to see, because by this point, we've broken the big level, you've broken that high volume node. This is suggesting that we could well see a continuation for the rest of the day. And you're getting this volume continuing, 6,000 again, traded right near the lows, and the market then keeps on selling below it. So this was the first move, and this is what effectively creates the FOMO. FOMO, for those of you who don't know the abbreviation, is fear of missing out. And so that's the first bit of the move. That was the day before, and this then, we've just seen it from here to here. This then plays out into a much larger move, which you could look at and think, well, maybe I should have stayed in. I should have made more out of this. And this is how the FOMO builds. You start thinking, well, I didn't take as much out of this as I should have. We've got a 100 tick move and I've maybe only taken 30 ticks out of that. Still a good trade, and if you can do that on decent size and take the very clear, very straight move, I don't think there's actually a great deal wrong with that as a trade strategy, rather than continually trying to get in through the chop part. But this then changes your perception of how the market's trading, and that's the important part. That's what builds into this trade, or this FOMO trade. And so what I've got on this chart here, I'll come to explain in a moment, but this is the move that you get on Friday. Break of the trend line, break of the daily level at 164.74. Now, what this serves to do is create a recency bias, whereby you recall the most recent movement, and that then creates an expectation of the same thing again. Also, and this is where the FOMO really kicks in, you want to see the same again, because however well or badly you traded this, if you have an expectation of the same again, you really want to be on that because you can see the scope and the possibility of that trade. So what it serves to do is tilt your perspective towards anything that's a clue for similar again. You overweight that. That becomes very, very important and very easy to pick up on and very quickly jumped on. What you don't do though is look at the reasons that it may not work. So any clue against that is seen as a sort of side issue. Let's not worry about that because it's not adding up to what you really want to see. And even though you think you wouldn't say that kind of thing and dismiss things, subconsciously, because of the recency bias, this does happen. Now, the point I want to make here is that typically after a strong trend day or a big range expansion day, I'm looking particularly at these three, where you've got 100 plus, or even 4, where you've got 100 plus tick ranges, the following day, as indicated by each of these arrows, is typically much smaller and non-directional. So from that point of view, you should be coming into this day thinking, unless this shows really, really clear signs, i.e. stronger signs than it did on Friday of the move falling, you shouldn't be wanting to try and get overly aggressive on this. And if you do sell it, well, you want to limit how far you're going to take this. So on this day, you've got a break of lows. Next level coming up was 36 down to 32, so 100 ticks lower in the next 36 to 32 area. So that is perhaps the limit of your expectation, and what ends up happening is there's your open, there's your close, completely sideways day. We try it lower, back up, try it again, back up. That's more typical of what you'd expect, but this creates a FOMO trade, and you've got two ways of looking at this. Either, and when I say two ways of looking at this, I mean two ways of looking at this in a positive way of being able to try and make some money out of it. Either you limit your expectations and you look for a smaller move. So as we start breaking the low, because this is very similar to Friday, early test higher and drop. As you start breaking the low, you limit your expectation. You say, okay, if I can get it somewhere down towards 36, 32 area, I'm happy with that because it's less likely to be another 100 tick plus trend day down. So be happy to come out here. Also, you could realise that you overweight the signs to the downside, and actually you could start looking more and focusing more on clues that this isn't working. Unlike the move down on Friday, when the consolidation comes, delta stays dead flat and starts to fall again. On this move, you only get one 5-minute candle of consolidation, and delta then starts to tick up immediately off the low. That's clearly a sign that this perhaps isn't the move that you're looking for and should be a reason to think about getting out. I'll play you how this one trades, and you'll see some of the similarities, but you'll also see some of the quite distinct differences in the way this trades. So we're down at 54s at the moment, so we're currently trading just below the lows. So this, much like the Friday move, is where you're thinking, right, now the selling needs to come in. But you see already not too much by way of speed in this. It certainly feels a little bit slower than it did on the first one. But nonetheless, we've shifted volume to the lows. and we are starting to come off a little bit. So the lessons to be taken here really are about thinking about the size that you're going to trade. Would you do this with as much size because of the lower expectation of a move? Also, and this is how some of the guys treated it, that they've seen this trade before, this second day where everyone goes for it, trying to take the same that they did out of today as they did the previous, or trying to in fact improve on a missed opportunity, which is where the fear of missing out comes from, trying to improve on that missed opportunity from the day before. So this is the move down now. It starts off quick, and again it's done similar, breaks the low, quick move down, starts accumulating volume down at the lows, and this then is looking very, very similar. This is where you can start thinking, yes, this is the move, and your expectation, rather than goes from there's a good level down at 35s to 36s where this could well stop, your expectation goes 100 tick range, and you start thinking of another 60, 70 ticks below here. Excuse me for that. I'm going to bring the ladder back up. So here we go. And that's what I mean by FOMO, that you start looking for more than is really there. Where the real clue comes here is once we get back to 41s, on that move down on Friday, 41s held every single time, or not 41s, but the equivalent, the point where it holds the volume. And what we'll see in a moment is, yeah, this would be the trade that you'd be looking for, sell those 41s, makes sense. What we'll see in a moment is the ease with which it trades back through there. See 41s, 42 bid, comes back on the offer, 42 bid again, no counter sell. 43 bid, 44 trades. So the market's finding it very, very easy to tick up back through these prices. That should be a really, really clear warning sign that this, as much as you want it to be like the move on Friday, is not actually looking like it. That selling is nowhere near as strong because of the fact that having put the volume in towards the low, it's not able to sustain the selling. That should be a good clue to get out. What we then also get is a move back down to 41 that finds more buying, and that's really key. That's on this little move here. Back down towards the area where the volume's put in and the buy-in remains. So what that's showing you is that the buying into this area that pushed it through is still there and absorbs on the drop back down. That's a really key thing to be looking for, and that's something else to warn you that this move is not there and we are potentially going to take a move back up. And I know that this caught a few people out. Speak to some of the other guys. Some of the guys went with the attitude, don't trade it, because it's always tempting, it's always easy to lose trying to sell the pullback if you haven't got in from up here. I know that some other guys waited for the pullback, looking for a move back up towards the lows, back up towards the 47, 48s, and as it got there, they sold it and they ended up on this phase of the move. All because of the fact that the majority of people, you've got to think about who's taking these trades on. The majority of people selling this day are people who are trying to improve on what they got on Friday. Whether that was a good or a bad day, they're trying to take more out of it and their perceptions have been skewed. And that's why it becomes easier to turn back around. And that's what I mean by a FOMO trade, that you're influenced by what recently happened and you then try and take more out of the move than is necessarily there. So make sure you're actually looking at what's the likelihood of a continuation after a big trend, and are you getting overly weighted towards looking for a certain trade setup? Because if that's the case, you need to then exercise a bit of caution, step back and say to yourself, right, what clues are there that this won't work? And sometimes it's more important to look at the reasons it won't work than it will, because that stops you overlooking those in exchange for looking for what you really want to trade.